Hi, welcome to this video. It's the 4th of December, it's Saturday. In this video, we're going to look at the major opportunity in the Forex markets right now, in our view, which is to buy the yen longer term. Now, in terms of the yen, I'm going to look at several pairs in this video. We'll go over the charts in just a moment. Now, regular viewers of our videos will know we've been heavily bullish of the yen since the start of November, and the yen has made a really great move to the upside, but that move is nowhere near over. The yen is going far higher. Now, in terms of for anyone new watching our videos, when we do our analysis, all we do is do very simple fundamental analysis to look at the really big fundamentals that drive the big trends, then look at the sentiment of traders towards those fundamentals. That then gives us our bias of which way we want to trade. We can use very simple technical analysis to time and manage our trades. Now, in terms of the yen, let's go and take a look at some pairs. But just before we do so, please do keep in mind, it is obviously my view as of this specific moment in time. It can change in line with the market action and conditions. If you want all our trading techniques, you want to learn our strategy and check out our daily technical and sentiment analysis of 14 FX pairs, all you need to do, click on the link beneath this video. You get live access to our member center. You can also follow us on Facebook, join our Facebook group of traders, and check out our recommended regulated ECN broker. Right, let's go and take a look at some charts. And the first pair we are going to look at is going to be NZD JPY. Right, we're on NZD JPY. Now, in terms of this pair, we've had a big move down, but we think there's another 800 pips on the downside. Now, just before I discuss getting into the pair, I just want to go through how we played the trade and also the positioning in the market of big players, and also this red here, which is heavily bearish for the Kiwi. Okay, now in terms of where my cursor is here, we have a rally from 77. It's all blues. It's well over 500 pips to the upside, and speculators build up a massive net long position. And we're saying at the time that move is overdone. We expect a correction to the downside. Now, after getting above 82 on the blue here, we do make a new high. We'll pop our entry below the round number, below 82, 81.70. Get in. Then you get what you get in a lot of trends recently. Yeah, you kind of get a bit of sideways, gentle move down, bit of sideways. Then we speed up on the red, and that's a really nice red as well. Okay, now in terms of this move down, it isn't people coming in to buy the yen fresh. It's mostly big speculative money that was long the yen coming out on stop. Now, I still think there's more stops to be run, but I think the big speculators are going to do, like your hedge funds and managed money, is they're now going to reverse their position, go short the Kiwi, and power a big move to the downside. Now, in terms of playing this trade, I'll just go through that in a moment. We also need to look at the monthly chart, but first of all, what I want to do is go through why the yen is so bullish for us at this moment in time. Sorry, I just need to get the chart. S&P. Now, in terms of, sorry, I need the daily before I do the monthly. Stock market, very important in terms of the yen. For anyone unfamiliar with the yen safe haven status, if you get big weakness in stocks, you get risk off in financial markets. Two big safe havens, the yen and the dollar. And the yen in big risk off tends to move quicker than the dollar. Now, in terms of that big red we saw in terms of NZD JPY, that corresponds with the big red here. What caused the red candles? Well, Fed Chair Powell said that basically inflation, not transitory, and the Fed may have to reduce stimulus quicker than they previously anticipated. Okay, so that's really bearish for stocks and causes the fall. You do have a blue trying to get back up, a couple of reds down, blue up. Yeah, bigger candles. I think this market is done, and we're going to go a lot lower. I don't rule us chopping around below, let's say, 4.7 and current levels for a while. That won't weaken the yen in a big way. But if we break lower, there's a lot of downside. You can't really see it on the daily chart. You have to look at the monthly chart. In terms of the monthly chart, first of all, how important is stimulus to this market? When you had the big coronavirus sell-off there, this rally after the sell-off is powered really by Fed stimulus and the view that the Fed is supporting the market. What is it, a 90% rally? It's a ridiculous rise, isn't it? Totally detached of the real world economy, price earnings levels, bubble levels. The real economy is not doing that great. Okay, was it Charlie Munger? I think he said the other day it's even worse than the tech bubble. Charlie Munger is Warren Buffett's partner, for anyone who doesn't know who he is. So, yeah, you've got stock markets that the rally looks on borrowed time. Yeah, inflation is high now, or well, obviously it's high. It's going to stay high. So the Fed are probably going to have to hike rates quicker than the market expects as well. That's extremely bullish for the yen and bearish for stocks. Also, if you look at the global economy generally, made this point in previous videos, it's already slowing up, and you've got the Omicron virus variant in the mix as well. Things don't look good going forward for the global economy, but they look good for the yen. Right, back to the chart. Now, in terms of this pair, how do you play it? It has been a big fall. We've got 570 pips out of it so far, but 800 more to come. A lot of traders are kind of reluctant to get into big moves like this and go with the trend. But yeah, I just think the yen, far more strength. So if you wanted to do it, you're sitting at 76, a little bit oversold. I think we could get back to 77. If it gets up to 77, you could sell off that level. Our stop is 77.70, back behind these two bodies after that tail failed. Okay. What about if we don't rally? I would just take a break of 76, and you could put the stop a little bit closer. Let's say we got through 75.80, pop stop, let's say 77.40. Look for a run to daily lows, but I think these will just give way. I think you've got to look at the big monthly levels. So I just want to bring them up. Sorry, let me just find them. NZD JPY. Sorry, let's do daily, monthly. So 72, I think that's a level of support, okay? And then 68. So basically, in terms of this pair, if you look at the valuations, Kiwi is most over. I don't know if I said this earlier. Sorry if I'm repeating myself. But Kiwi is the most overbought major currency. The yen, the most oversold. So 68 is on the cards. Okay. If risk off comes into play, you're really going to see the yen motor. We shall see. Right now, we are going to go to our next pair, which is CAD. JPY. CADJPY. Now, in terms, just for anyone new watching our videos, I'm not looking at USD JPY. Reason I'm not, I do think the USD is going down, but you're trading two safe havens together. So it's better off to trade risk currencies against safe currencies. Commodity currencies are obviously risk currencies. Now, in terms of, we're going to look at CADJPY. Last pair I'm going to look at is Euro JPY, which I think is going to have a massive hit to the downside. Missing out AUD JPY. It's been a great fall in the AUD, but I just feel from here the NZD and the CAD have more downside potential. So we're focused on 3 yen pairs. Now, in terms of this pair, I'm just going to go through the way we played this trade because we've been stopped out of our initial entry and we've re-entered. Just want to go through how we re-enter if we get stopped out of a big trend and we expect the big trend to continue. Now, in terms of a rally, again, 800 pip rally from the 85 level. That's speculatively driven. Okay, speculators built up a really big long position. We noted at the time we touched 93, finished just above 92. So we thought the buying could be exhausted, so we'll sell the next round number. And we get in at 91.80. We then move to the downside. We get this big red come into play. So in terms of when we had the big red, I did think it would continue, but just wanted to protect some profits. So I tucked the stop behind the round number 89.30 of it clipped out. Okay, now all we'll do if that happens is, if we're still bearish, we'll look to sell back through the round number. So you can see it will just come back in at 88.80. Now in terms of yeah, if we'd have run on to the upside, yeah, we could have played the 90 round number, or maybe even 91. Okay, so just it's a way of locking profit. Then we can just play round numbers to get back in the trade. Since we've entered it, you had yeah, a red come up above the 89 level, failed, half-hearted blue, red tail pokes 89, finishes near the lows. It's looking bearish for the CAD. And one thing I'd note in terms of Friday's candle is you had really bullish news out of Canada, didn't you? You had an employment number, 155,000 jobs added against just 35,000 expected. Canada returning to full employment, but the CAD couldn't bounce, okay, or hold any upside. That just shows the bigger picture in play of risk on, risk off, and how oversold the yen is. Now, there's still plenty of speculators get taken out on stop, but I expect the same as in NZD JPY. Once they're all out and stop, they're all going to reverse to long yen trades or short CAD trades. If you want to play this trade, how do you do it? I just place an order at 87.70. Stop. Yeah, you can see ours 89.40 behind the tail. We'll clear the round number. See if she runs. You can always play a rally into resistance levels, but I'd initially place an order just below the low. We should get down to 85, but really these levels should come into play long term. 84, then 80, and I'll show you them here. That is a level of support where that big blue pushed up, and then 80. Okay, so yeah, CAD JPY, yeah, I like the look of this trade. Should be hopefully going lower. Now let's look at our last pair, which is going to be Euro. Euro JPY. Now, in terms of when I was doing CAD JPY, I said, yeah, selling risk currencies against safe havens. Is the Euro really a risk currency? Yeah, I think so. Done plenty of videos over the last couple of months on how bearish I am on the Euro against the JPY and the USD, and check them out. I feel that in this pair, a factor that's going to really come into play as we move forward is Japanese are the world's biggest savers. I think overseas they've got 500 trillion invested with a huge amount in Eurozone. I think 20% of the Euro, not Euro, French bond market, for example. That money is starting to go back to Japan, and more will be repatriated, which will pressure the Euro lower and limit upside, in my view. Now, in terms of this pair, got the blues on the way up. We sold the round number. This red here kind of worried me though, because the tail exhausted back, so stop behind 129, get taken, sell on the red. We do finish above 129, but we're not running away to the upside. Little red, back through entry, really choppy, but now we're below 128. My own view is it's a sell. We've taken out a big level of support. So if we open at a new low, I would sell. If we got back through 128, just sell back through the round number. Plenty of downside potential in this. I'm looking for 120. So it's basically back here, and I think that'd be fair value for the pair. We could even go lower than that. I'm so bearish of the Euro, but yeah, if we got 120, we'd be very happy. So there are three trade setups we really like. And in terms of, when you're trading big trends, be prepared for the choppy sideways action at times. Keep your eye on the big picture. If you get stopped out, just play round numbers to get back in. Is there anything else I can add? No, I'm just extremely bearish of the global economy going forward. And I think this move in the yen might just be beginning. Just expect a really firmer yen going forward, obviously. Right, that's the video for today. Thanks for watching it. Take care. Have a good day.